Hi everybody, it's Rowan Smith with Citywide Mortgage Services. The question I'm here to answer today is how do you minimize your mortgage penalties? The short answer is you have to pick your lender very carefully. Now on a variable rate mortgage, uniformly across the board it's essentially a 3-month interest penalty. However, fixed rates are where the real differences occur between the financial institutions. Now to give you an example, I'm going to pick on the big banks here. The big banks have posted rates. Right, now nobody really usually pays the posted rates, but the posted rates are there whether it be for qualification purposes or for subprime lending purposes or for penalty calculations. So to give you an example, with some of our non-banks, these are broker channel banks that you can't just approach, you have to come through someone like myself. When you have a 5-year term, and let's use the example of having 3.5 on your interest rate. You have the same product at a bank, 3.5 on a 5-year term. Now you may feel more comfortable with that bank, you may be more familiar with them and whatnot, or have an existing relationship. However, when I tell you the difference between these two penalties, you'll see why the broker channel lender is often the way to go. They're sometimes referred to as monoline lenders because all they do is mortgages. So what they do is, let's say after 2 years, now you started at 3.5%, and after 2 years' time, you decide I have to pay this mortgage out for whatever reason, divorce, selling the home, being transferred on the job, doesn't matter. At that point in time, the chartered bank goes, you're 2 years in, you have 3 years left. So they go and look at their posted 3-year rate, which is like 3.55, and they go the difference between 3.55 and your interest rate, and they calculate it that way, and they determine, is it greater than 3 months interest, or is it the interest rate differential? Now, we don't know where rates are going to be in 3 years or 2 years' time. It could be that the rates are far higher, so you don't know if they're going to be calculating that penalty off of a much higher posted rate. The difference between that posted rate and the rate you're paying, if it's greater than 3 months interest, you'll pay that amount. With a broker channel lender or the monoline lenders, it's the same calculation except they don't use the same posted rates as the banks. So if 2 years in, they look at their 3-year rate, which is typically a 3-year discounted rate, maybe even lower than what you're paying right now. And if it is, it's just 3 months interest. So in these circumstances where you're trying to minimize penalties, it's important to do that up front. You're not going to ever get banks to pick up penalties on the back end. They will not pay one another's penalties. I get this question all the time, and it simply doesn't occur. In my 14 years in this business, I have never seen a bank pick up another bank's penalty. So if you're watching this video in the middle of your term hoping to find a way to minimize it, unfortunately, there is no easy solution and no easy way out. For Citywide Mortgage Services, I'm Rowan Smith.